Hey traders, what's happening? Jamie Setley here. It is April 9th, 2020. It's actually the end of the week because Good Friday's tomorrow and markets are closed. And well, most equity markets, I'm assuming across the world are closed. I know US equities are closed. No futures or anything like that. Bond markets obviously are closed. So, I mean, FX markets are open as they always are, but presumably not a whole lot going on. I will say that it could be possible to see an outsized move um, because of OPEC and oil stuff. So, that could be reflected in FX somewhere, maybe CAD, I don't know. That relationship, is kind of broken down. But if it's a crazy super move, spike, then you could have CAD make an outsized move. But yeah, we'll have to wait till Sunday night in futures to see what happens with that. Peter's asking about S&P. Peter, I'm going to look at the dollar first, and then I will go to the S&P because I actually have a lot to say on it. And I will also look at the NASDAQ because I've got a lot to say there as well. All right, so first off, this is DXY. I thought it interesting that last month we broke out above, or 2 months ago, no, last month, I can't even get it straight. In March, we broke out above this trend line. This trend line, by the way, is back to connects the 01 low or 01 high in the 2016 high, okay? What's interesting, and I do this a lot, is, go back in time and see kind of where that was, if it hit anything. And it does hit some pretty big spots, including November 84, and then a good pivot around here in 85. This analog is actually, I was looking at this and noticed the shape of this action back here kind of looks like the mirror image of this. So you can see that I've got that mirror imaged right here, okay? So I will click on it. If you want to do this yourself, you can copy it, mirror image, drag it over, okay? Gary, what's up, man? Sure, I will absolutely look at the abomination and dollar Mexican peso. So what we have here, this is the analog I was talking about, and you can see that it's, resembles it pretty well in terms of the bigger movements, like topping, even a low over here, right? Big top over here, which was perfect in 2016. Kind of the rally phase was suggesting a top really up around September of last year. And we actually got one. I thought that was going to be the top, remember? And we started to break down, and then, just a big FU by the dollar and, across everything here in March. But we are in a declining phase of that analog, if you will. So my view, right, is bearish, the dollar. It's not been the easiest thing to trade. There have been setups that just haven't really gotten triggered on them. So, we'll look at that stuff here in a bit. And then, of course, this is the chart that I've really paid a lot of attention to, notably this long held line that we've had here, right? So if really it was back to, the presidential election, sure, or sorry, that was Feb 16, but really the November 16 presidential election, US presidential election, was when that line started becoming really important. You can see what happened here in June 2017, the breakdown, right? Kind of resistance for a long time. And then we've traded all over the place recently around it. So I don't know, maybe it's not as important anymore, but either way, I'm still following it. Hold on. Oh. Yeah, so the question on DXY is whether or not, and this is not nearly as clean to me as US dollar, which is the chart I had yesterday, right? Was looking for a little bit of a pop to get short the dollar in a couple places and didn't get it. So I do think that, 12, 12,420s, you know, or something like that at this point might be where you get maybe a bounce, and that might complete 5 down, 1, 2, 3, 4, 5. Okay. So either way, kind of thinking near term dollar bearish here. We'll see how we come in next week, assuming that a whole lot happens into tomorrow with Good Friday and the holiday and everything. If you got a bounce though, either tomorrow or Monday or Tuesday, whatever, 12,580 is going to be the spot for some resistance, some dollar resistance, I think. You can see that level just clear across that horizontal plane, okay? Okay, let's go to the S&P first, and then we will get into the rest of the currencies, because I know there are several folks in here that really, really want to see what's going on with the S&P, and I've got some interesting charts, I think, to share with you. So not least of which are going to be the volume stuff. So real quick, let's move on into, indices here, the long-term indices that we've been sharing and looking at. Okay, so this is the NDX chart. Now, I got bearish again, remember, on Tuesday, and with a huge reversal, rallied, you know, big time yesterday, and then NDX eked out a high today and actually closed slightly lower from where it opened, higher from where it closed the prior day. But this is a cash market, okay? So this is not going to be futures. And this has been the weakest link of the last couple days, which is interesting to me because, you know, NASDAQ tech was the big leader on the way up, right? You saw today semis were weak. I don't know if that's looking too much into things or not, but just looking at this chart, I mean, this is a pretty darn big level. You know, underside of this line here, which is, you know, completely verified. It was massive support on February 28th. So support has turned resistance, right? Resistance turned support here in December on the red line, turned resistance again, really the last couple of days. So I'll be very interested to see how we open up next week. On my kind of volume proprietary stuff, we did get the first, I don't have that one in there correctly. Hold on for a second. I did not get, here we go. So sorry, this is gonna be kind of a mess. So let me clean this up a bit. All right. So I did get a 4-hour reversal signal today. That was the first bearish one on the S&P 500. This is futures since February 13th. Okay. Now we actually didn't top. A lot of times these ones are early, especially the topping ones. We didn't really top until I guess the 19th, the 20th technically in futures, but either way, we've got the first signal in quite a while. You can see the two bullish ones here and here, which would have been, you know, again, this one would have been early, but what have you. Anyway, we do have, you know, an objective indication of something happening here. Now, the concern on this, I guess, is that, you know, we broke through the level I thought we would hold at on the rally. So if I go back to the S&P 500 over here, right, I was looking for this to hold this center line right here, okay? You know, it had been so clean as support on the way down for a couple days. You got classic median line action with a break below, right? Came back, tanked the lower parallel, came back, and then that was just a perfect looking day for a median line resistance and just didn't do it. You know, I'm not going to make excuses on like the Fed or whatever because, you know, they came out with like 2 trillion more or something, you know, today. Who knows what's next? Because look, that's not really how I take my, you know, my information. I really don't make decisions based on that. So, you know, I got to live with my decision-making process here, right? So what about some other simpler, just kind of, you know, charts to look at here? And that's what I had up originally. And you can see right here, I'll get rid of the highs and lows because what I want to show is just real simple. All right, this is SPY. We're going to look at the SPY, which is basically your S&P 500, right? So this magenta line here, all that is, it's not a moving average. It's actually the midpoint of a 52-week high and a 52-week low on a closing basis. Closing basis, why important? Because it's it's kind of the biggest voted upon price at the end of the week, right? So I like to look at it. Generally speaking, you can see, especially if I look at it on a closing basis, you can see what happens here, right? It's pretty big. I mean, just kind of ride it on the way up, and then after you make a 52-week low, if you're really in a bear market, you should probably find resistance on it or pretty close to it. This is what happened in 2008, right here, okay? Go back a little bit, and we can look at what happened during the tech bubble, or the bursting of the tech bubble, right? Same thing. We made a 52-week low, and the first big rally back, we actually held at the 50-week midpoint, okay? Even subsequent rallies were really pretty close to it. You know, that one here, you know, a little bit of spikes above here, but generally speaking, it's like if you were, you know, selling or covering your shorts on panic, right? Which is it's just fairly easy to recognize. You know, we've done it here plenty of times, and then trying to get short or bearish again back near the midpoint probably did pretty good, right? So what about now? You can see the midpoint, we kind of rode it on the way up, right? This was 2018. We actually didn't get to a 52-week low at all. We did get one over here, and then more or less we were resisted on the 50 midweek midpoint. Closing basis, it was pretty solid. So now we're back very close to it. The high today, by the way, was 281.20, so that's essentially 28.10. And 283 is going to be the midpoint, so we're really close. Let's look at the Qs. Qs have hit it, okay? And you can see just how precise this midpoint level's been for support and resistance, okay? I mean, right on the low. It's actually 7 cents below the low here in June of last year. Obviously over here in early 18, VIX apocalypse, blah, all that good stuff. It's also the underside of this trend line, by the way. Moving on back a little bit more, if we look at the financial crisis in the Qs, aka the NASDAQ, right? We did actually poke above it a bit. It was pretty strong in 08. The second one back hit it. So my point being is that, and it's just a general rule of thumb, like after you've made a 52-week low, the snapback rally, the level to watch for resistance a lot of times, just a good rule of thumb, is the 50-week midpoint. You know, sometimes that's going to be close to the 50-week average. Sometimes it might not be. The range is pretty wide right now, so I'm not sure how close they are, but either way, this is NASDAQ composite index, not NDX, but the composite. So high today was 82.28. You've got 83.05. Point being is that if we haven't topped for the next top, I think we're really close. At least you need to top soon if you're going to go back down, in my opinion. So I don't know. Sentiment's still a little skewed. You know, people seem to be kind of expecting weakness here, so I don't know if that needs to, you know, subside or whatever. But you know, here's NASDAQ composite. Here's financial crisis. You can see 52-week low comeback. So a big spot. That's all I wanted to get across with that. Okay. And the volume reversal at least gives us a signal that something may be happening here. All right, let's get to FX again. All right, so Euro, last update on this, we were talking about a little range action with 108.30 and 109.50, and we've hit both of them over the last couple of days. Risk to me is on the upside. So, you know, to trade it, you can't really go long here, I don't think, because you're at resistance. So you look for a breakout. That's simple, okay? If we got a breakout over the next couple of days, you'd put a stop under wherever the interim low is, because that level here today was a high volume level at 109.30. So if we break above that, you shouldn't come back below. You should hold the high volume level, okay? Really price trading great between these channels. You know, this is the channel from the 2019 high, and you can see the lows, the highs, you know, even today, a little bit of resistance on that level. So to me, in a bullish position with 5 up, 3 down, right, we should be in a third wave or C wave higher. You know, minimum target's going to be 2 legs up, which I think is like about 112.50 or something like that, maybe 112.30, and looking to buy a breakout. Cable, great chart. Remember, this is kind of a good trick to know, right? Your original trend line slope, right, off of beginning of 1 and end of 2, put it off of the top of 1. Once you break above it, you know that you're no longer in a corrective process, right? We can see this in any time frame on any market. I'll actually give you another example here in a little bit on the NASDAQ. And we broke through it and it came back. That's wave 4 support. If we pull back from here, which is a horizontal level, then I would be interested in buying this again. But if we don't, I'd actually be interested in a short up here and would probably want to see a volume reversal up there to take that, because it would certainly be a counter trend move. But after 5 up, you would expect to get a pretty good size pullback. Okay. While we're on the subject, by the way, of let's take a look at, let's show you what I meant by the corrective channel. So this is the NASDAQ composite. And this is, you know, we're talking now spans of decades, right? Compared to that British pound chart, which is like hours. And it's the same exact concept, okay? So now you have your channel off of the beginning of 1 and 2, end of 2, go across, it was resistance. Once you broke out, now you were in an impulse, now you were in an uptrend, okay? We can do our extensions as well. The half extension was resistance. We blew through the second extension and came back. But you can see how this principle, right, of kind of this channeling principle works on any time frame. You could find a million, you know, a million of these examples all across any market. It's just how price behaves. All right, let's head to my favorite FX pair at the moment. Really is the Australian dollar. You know, we had just the bottom of a massive channel. Near term, I actually am interested in shorting or, you know, getting bearish near 64 to 64.50. There's a lot here. You've got the low from February, 64.34. You've got 618 of the entire move from, what is that, 12/31, right? December 31 is going to be 64.49. Most importantly for me, though, is this huge channel. So we'll go to a daily. By the way, the 50-day average is going to be right here too. So here's your channel from the 2011 low or high, right? Hit it here. We're all the way back to the middle of it, almost, okay? Clearly it's a big level because look at the touches on it. Ding, ding, ding. All right. Look what happened back the opposite scenario, which was a bigger channel, but the channel from the 2001 low, right? You came back to that center line. It actually acted as a huge slingshot for the move higher. I don't try to look that far out. I'm just kind of want to see what happens at 64, but I'd be looking to take something, off this here. And with the way the markets have been moving lately, as in like everything's kind of been moving together, it kind of makes sense that you would find some resistance here, especially if the S&P is going to find some resistance here, right? If I just put an S&P chart on here, I mean, there you go. So yeah, Aussie, I'm looking for resistance up at 64, okay? What has happened with my, like, have a little hand here. It's kind of weird. What is that little emblem? All right, let's go to the Canadian dollar, which has been frustrating for me, to say the least here, but is this drop corrective? Is this drop impulsive? I don't have a strong opinion at this point. What I would do though is I would simply, I'm not sure what, I can't like click on anything over here. What's going on? Must have pressed something weird. Anyway, follow this trend line, okay, from the high. You break above that, then we're looking for that fifth wave up in Canadian dollar, right? So 1, 2, big 3, big choppy 4, 5. Remember, the point of a fourth wave is to get rid of all the excess positions in the third wave. After a third wave, everyone wants to get involved with that market because it just had a huge move. So that's why you get choppiness in a fourth wave. It's just the behavior of a market. So that'll be one to watch for next week as well. And then that might complete the whole ordeal, because this is the really long-term chart. It goes all the way back to 2011, right? 1, 2, 3, 4, basically a 5. The question is, do we need to go for kind of a 5, or whatever you want to call it in Canadian dollar? But we got that short-term trend line to watch in dollar CAD. That's the big focus for me right now. Dollar yen, which we're going to look at as Gary had asked. So you know that on my long-term suggestion or thought process on dollar yen is that it's really bearish, right? So you have the really long-term 5-wave drop, a big A, and my suggestion or thinking is that you go mid-90s at some point. And then when we zoom into the short-term picture, which I'll have over here, right? Then we've got resistance up near 110, but the question is, are we finished with this? I cannot scroll this thing over. I don't know what happened. I must have clicked something wrong here. So I'll have to get that figured out later. All right. I don't want to spend my time on the webinar trying to troubleshoot. So yeah, so 110 was such a huge level, right? We had 109.90 as a 618. But at the same time, this 108.50 level has been really big. So you can go all the way back to kind of November of last year, and you can see, big support, resistance, support, spike into it, right? So we haven't, we're kind of at it now. We're 108.40 right now. It's not really a break to me, especially considering it's a holiday right now. Yeah, it's not the magnet. Michael was saying. It's like I can't scroll across. It's like I can do this with my mouse, but I can't hold down and scroll. So I'm not sure. It's not a big deal. I'll figure out later. So if we do start to break down, whether that be early next week or whatever, and we'll just have to kind of try to latch on to a short. The whole idea, of using kind of these volume levels as well is that it gets a good point of reference. So 107.94 is a volume level. So if we break below that, that would be bearish to me. I can show you that here on yen futures. And remember, this is yen futures, not dollar yen. So it's going to look the opposite, right? It's upside down, if you will. Well, today, on the dollar yen drop, we actually got resistance from the volume weighted average price back to the March high, which would be a dollar yen low. And they're all clustered together, right? This thick one is annual VWAP, right? Annual volume weighted average price. And then you've got VWAP off the low. So, everything's clustered. It's very much like a moving average in the sense that when you have a bunch of, moving averages clustered together, the market, it's indicative of a market that's been in a range for quite a period of time. Like your 50 and your 200, all that stuff are together. It's the same with volume weighted average price. It's a critical zone, okay? You're either gonna kind of, go into a drift and it's gonna suck, or you're gonna get a really big move because the market's compressed, right? And you really can see that right now if you look at the so-called risk assets or whatever. Yen's not doing hardly anything, right? It's been a really quiet week for yen. Obviously not the case in equities, global equities, notably US equities, nor has that really been the case in commodity currencies. So, at some point, yen will get its day in the sun. It could be soon. On a reward to risk basis, you're fine. So above 107.93, which is the high volume level on yen futures, the equivalent high volume level, we are looking for a bigger move to the downside in dollar yen. Okay, some other super interesting charts, probably one of the faves at this point is Euro Aussie actually. So remember we got bearish Euro Aussie way back on the spike, right? This might tell you a little bit something about risk sentiment too if we hold here, because so this is the channel from 2012, nailed it right up here, and our target was down here on the center line, right? That's a huge spot. Look at how important that center line's been for many years, okay? And here we are. I go to a 60-minute chart and you can see where we are, right? So if we get some reversal evidence here on this over the next 1-2 days, whatever, that, obviously that's a function of Aussie weakness and Euro strength, okay? But it might be also indicative of, say, another deterioration in risk sentiment. So much like the, the S&P, the NASDAQ and whatever are at extremely important levels, Euro Aussie, not coincidentally, is also at an extremely important level. It really kind of fits with me looking at, that 64 level, 64.50 in the Australian dollar as a spot that I might want to fade. Again, would like to get a signal to do so. But it also, maybe it's Eurocentric. I don't know. We don't know which leg of this is gonna do something, right? We have Euro pressing that resistance, and if we break above, it's a great long because you're in a potential third wave higher or C wave higher. So yeah, very interesting, the Euro Aussie chart, but says more about, not just about Euro Aussie, but maybe more about maybe where risk sentiment may be as well. Okay, Gary also asked about dollar Mexican peso. Glad you asked. Actually we looked at this, I think, and put a trade on a couple weeks ago. Didn't survive the spike on it though. Yeah, so here we go. So this was the one we were looking at. So first of all, this is the weekly channel from '08, right? Financial crisis here. Two of the last 3 weeks, massive reversals. No, this chart would be telling you kind of the opposite of what Euro Aussie is saying. You got to look lower towards this parallel, which is essentially the high from here. And by the way, part of this, so, you know, people are not aware. Mexico is like, they do the most famous oil hedge every year, okay? And they will move with crude oil, because if they are hedged, right, and oil does not hold up and it goes lower, like to $12 or something at some point, then, you know, it won't hurt them because they'd be hedged out. I think they actually made a comment today about, you know, saying kind of screw OPEC, like they don't care, like they don't need to, right? Because they are already hedged. So that's just something to think about. You know, it might not move with crude oil as much as people would think going forward. So bottom line is you got to be bearish here on dollar MEX, just because of that really long-term chart. Got to look down towards kind of the 22 spot, 22 handle resistance. You know, just look for a good horizontal level here to trade, honestly. It could be back at that parallel, which is 24, say 24.30, 24.35, something like that. Do have a nice little kind of head and shoulders to kickstart this thing, though. So you remember we shorted over here, dropped, we tightened our stop, and then we got stopped out for a very small loss. We went to a new high. So yeah, this is something to entertain next week as well. Basically, I think you want to sell strength. So I'm going to stick to kind of this level here at 24.35. You know, it is a good reference point. I mean, this is the really long-term parallel, and you can kind of see you do get some action around it, right? So I'd watch for that. You got it, Gary. No problem. No problem. Okie doke. Well, I've covered, I think, what I wanted to. What is there anything else that we want to look at? Let's take a look at everything in the news, which is crude oil. So this is the long-term chart, right? Thinking a fourth up to 33 and change, and then maybe all the way down to 12 at some point. Today's action, you know, we held yesterday, right? We were thinking that was a little B wave, and then we're going to 33. Well, spiked, and then we fell apart. So at this point, you kind of just have to, I think, stand aside in crude oil for a second. But if you're going to find support, it better be in about, you know, 90 cents. So there you go, 22.30. Okay, that's where I would look. If that doesn't hold, I would just kind of forget about it for a second. And, you know, even if we do end up going to 33 and change, you don't know how you're going to get there. I mean, you know, a lot of times I like to compare a market to taking like a cross-country road trip or something, right? There's a lot of ways to get there. You could take a bunch of different highways. You could take the straight route, or you could take the back roads. A lot of times a market will get to where you think it's going to go, right? Like the big level in question is a magnet. It just gets there in a very, very convoluted manner. Okay. So, you know, you could spike to a low and then turn around and go back there, you know, whatever. But from just a pure, simple trading perspective, you know, where do you want to hold if you want to be bullish from, you know, in the very near term future? I think you got to hold 22.30. Okay, after that, I would just kind of, you know, I wouldn't mess around with it at all. So that's it. Are there any other questions before I sign off? Going once, going twice. All right, I'm gonna wrap it up then. So everyone, oh, Pooja asked for, she came in late. All right, Aussie yen. If anyone, you know, before anyone leaves, I, you know, absolutely want to stress that. I know this isn't the easiest time for anybody, so, you know, stay safe. Wear your masks, I guess. Wash your hands. All right, Aussie yen. Hey, Gary, happy Easter to you too, my friend. Absolutely, you stay safe. All right, so Aussie yen, let's go to a really long-term chart. Wow, did we hit a level? So this is, you know, 2007, you know, forward, right? I mean, this crosses some of the biggest points in history. You know, 28, 2008, 2012. Brexit, that's Brexit right there, and right here, a couple weeks ago. So near-term basis, what now you say? I say to pay attention to this chart, which we had the other day. Or no, I did not publish this chart actually. So I did not. So this is you know, you first of all, you've got a leg up, leg down correction, looking like you got 5 up. Pretty good resistance, if not here, then maybe a little higher, which is 69.25, 69.40. That's going to be the 618 retrace, okay? Sorry, not retrace. It's where the rally from the low subdivides by 0.618. So this would be 1, and then this would be 0.618 of that, okay? So that's a big level to pay attention to. You want to buy weakness here. If you're nimble and quick, maybe you can try to short into some resistance. Ultimately, the bigger level and the level to be targeting is probably upwards of 72.20, 72.40, former low, 2 equal legs. In the meantime, I would just follow this channel though. This is a shift fork, right? That oftentimes is what needs to be used when the initial leg is really steep. You know, market 2009 low in equities is actually another example of that, because you remember the first rally off the low was insane, and so it you know, that makes a channel, right, or it makes a pitchfork impossible, but it makes a channel just way too steep to, you know, stay within for any lengthy period of time. So you know, let's see how this progresses. If risk, aka, does come off a little bit, you might get a chance to buy, you know, somewhere down in this region down here, right? There you go. So that's a big level there, probably around 67. Okay. But you got to let it come in. You got to let it see what's going to happen here. Cannot be chasing up here, in my opinion. I mean, there's just way too much. You've got this high over here from March 10th. You got the low from, oh, what is wrong with this computer? You got this low over here from late February, and you got a Fibonacci relationship up here as well. So yeah, don't mess with that. Just as an example, by the way, on the shift fork, right? Because I do love showing all the different kind of examples on the various time frames of how this stuff works, right? So we were just looking at a chart, you know, in Aussie yen that's, you know, goes back a couple of weeks. Well, let's say you were drawing a channel. This would have been your fork. That's impossible. This would have been your, regular channel. That's not going to work. I mean, you see how steep that first leg is back in 2009? Your shift fork is really the thing that you were following, or that we were following. And we broke below it, and now we're kind of getting back into it. So, yeah, a product of price and time, right? And reference points. Pooja says, thanks, was looking short anyway. Yeah, well, I think that's the right move. We're in the right, or into the right area for it anyway. So yeah, probably not until next week again with holidays, holiday weekend here. All right, so I am wrapping it up now for sure. And everyone, seriously, stay safe. And I'll be back next week. All right, take care.